All right, 3, 2, 1. Mic test. 3, 2, 1. Yeah, seems to work. So, hello everyone, and welcome to Trading Review number 3. Unfortunately, tonight is gonna be silent voice because I'm very late. It's nighttime here in Central Europe, and people are sleeping. And unfortunately, I cannot do this at my normal voice level volume. So I hope you're not gonna abandon the video just because the low sound quality, not quality, but volume. So let's get into this. Today it is Wednesday, the 8th of July, 2026. And this was my third trading day from the 50k fibers challenge. Now, today was a much better day from a process perspective than from a profit perspective. I have traded the DAX in the London session and the NASDAQ as usually in the New York session. London ended up as a losing session, but what was great is the fact that I actually respected my risk limits as compared to yesterday when I couldn't do that. And New York ended up being a much stronger, where I managed to recover the losses from London and finish the day slightly positive, just slightly positive, just a bit. So let's jump onto the charts. I really hope that the audio is going to be okay for the video. Let's jump onto the charts and I'll walk you through exactly what happened. So when I got on this morning in London, I'm going to take off the executions because this is really messy at the moment. When I got on this morning, this candle was not printed. This is obviously today's price action, so I think it's easier if I just go here. Yes, this is in bar replay. Okay, so if I go here back on bar replay, when I got on this morning, this is how the charts were looking. Exactly like this. So after yesterday's pullback that we had, I'm gonna switch back now to the fibers terminal. After yesterday's pullback that we had, and looking at all this price action previously, what I wanted to see today was basically a reaction from this level here. We had a over 6 months price action in this range, and I thought, I didn't expect us to go to all-time highs, but I thought that we're gonna get at least a reaction. So my bias coming into this session was looking for longs. So I expected the market to find support at these levels here and give a meaningful reaction at least. That's why I was looking for longs. Unfortunately, as you can see, for me, the session, here is where the session started at 9 a.m. As you know, probably from my previous videos, I have vertical lines where the regular trading hours finish for the previous trading day, which was basically Tuesday, 17:30. And I have another vertical line for 9 a.m. where we open today's morning. Everything in between these lines, I call it pre-market highs and pre-market lows. So basically this morning we were trading right at the extreme of the pre-market lows. And that's why this, coupled with the fact that we were basically retesting an area, based on this, I decided, or made me decide to look for longs. So throughout the morning, I entered, I think, in 4 longs because this was my bias coming into the session. And I think I also took 1 short the moment I saw that we were breaking down. So what I'm going to do right now, I'm going to put the executions on the chart so we can walk a bit through them. Okay. So my very first position was right off the bat, actually in pre-market with 2 minutes before we open. I saw this candle closing here and I said, okay, this has real chances that we're gonna have, if not a rally, at least a pullback rally. So a strong reaction at the open. Instead, what we did, we sold off directly. So my position was closed somewhere here, 275, 275, 3 lots. This was my first loss for the day. 3 lots, about 30 points, 33 points, something like this. My second position, as I saw that we were coming down, this was actually the short that I was talking about. And as I saw that we were coming down, I basically look on the left and I said, if we didn't react from this level or these levels that I wanted to see us reacting from here, then there is a high likelihood that we're gonna come to test this decision block where we had the breakout from. So that was the thesis for the short that I took. However, the short that I took, because I had a long bias coming into the session, and also because I saw the price starting to react, my short was very short-lived, as you can probably see. I entered at 203, I got out at 193 for a 10 points profit. As we came and swept this low, I have entered long again, and I have held through all this price action for about an hour, up until the moment when Trump decided to tweet that the ceasefire with Iran seems to be over, which created a sharp impulse to the downside, as you can see. So entered here, waited for an hour just to be stopped out here in this candle at 0.87, I think. Yeah, 0.87 here. Right. As we accelerated towards the downside after the Trump tweet, I said, okay, this would be a good time, perhaps, to long again. I decided to enter. Where was it? So I entered again with 2 lots. At the lows here, it made sense to me simply because we were trading at the support level. We were trading right over here. Right over here. And I didn't expect these lows to be taken this morning. I entered another 2 lots, got stopped out again, and ultimately I took a last position and I said, okay, this was my 3rd attempt long, or perhaps the 4th. I'm trying to limit myself at 3, maximum 4 attempts. So as you know, I'm trading discretionary and I probe a lot. Probing means I open, test trades or test positions just to test the market, to be able to see what is happening and to remain engaged in the analysis. That's why you see 1 lot, 2 lots, 1 lot, 2 lots. But what happens is in days like this, these losses are accumulating and you can easily hit your maximum daily loss. My maximum daily loss currently is $250. So by the time I got my last position, I took my last loss, I was already down $230. Now, I also had a bit of a conundrum with, like a bit of difficulty with the executions. Why? During my review, I noticed something interesting. The stop loss value shown inside TradingView when I was setting my trades didn't match the realized loss on the Fiverr's dashboard. So I got a bit fired up because it didn't happen once. It happened a couple of times. And if you want to bear with me, I will show you. I have some photos on my phone that I took especially because I was starting to monitor to see what's happening. So bear with me a second. Bear with me for a second. Okay, so I have to go here. Let's see if I can extend this so we can see the monetary value. Right. So buy in the DAX. These were the ones. I think these were the ones. Yes, one moment. So I have a photo taken at 9:52 and the position was for 1 lot with a stop of 78.25. And this has to be the one that got executed for 10 points more. 1 second, where is it? 807 here. So this is it. I'm highlighting it here. You can see it on the screen. I hope you can see. I'm not sure if it's clear. I hope you can see. Let me have a look. So as you can see from the photo, my stop loss was a 78. And look here at what level I got executed. 88. Another one. 37. This was with one lot. Yep. 37, and this was the one that got executed at 42. This is exactly the one. Here it is. The second one, 37, perhaps you can see. Yeah, I decided to contact their support and basically try to make the case, put all the things together, send them the photos, send them the screenshots from the dashboard, and they explained me that the TradingView only estimates the theoretical risk and does not include the spread or execution differences, while the dashboard reflects the actual executed price. Their explanation makes sense, but when you have a difference on one lot, where you have a difference of $10 or $5, that is a lot. Like, how much can you be slipped? And mind you, I only had one position during the Trump trade, just one. And that position, one second, that position during the Trump trade, moment, I cannot see it right now. 1036, was it this one? No. That position was slipped $10 for one lot. So that means around 10 points. I understand, but it wasn't just an isolated case. The other ones, I brought it to them as well. But they told me that, very simple, TradingView only estimates the risk and does not include the spread and execution. So the explanation made sense to me. But what I'm going to do from now on, I'm going to continue to be monitoring, because the differences still seem slightly larger than I expected. And I want to do this because, as you probably remember from my first video, I'm looking for a prop firm that can offer good executions and good spreads. So basically, this was the story of the DAX. I ended up the session at minus $231. And now what I'm going to do, I'm going to go into New York, where my bias, by looking what happened in the morning in the DAX, in the European markets, my bias for New York was already bearish. After this day here, after this daily candle, my bias was bearish for New York. And we had a sharp sell-off. This was the sharp sell-off that we had during the Trump tweet. This was basically the London high here. And following this sell-off in the headline earlier in the day, I expected the NASDAQ to retrace back into the origin of that move, which also aligned with London highs. So instead of entering full size immediately, I build a position gradually using 0.5 lot entries. Like, I reduce my lot size. I was already coming psychologically after a loss in London session, so I decided to take it easy. And I've done exactly, I respected one of my most important rules in the process and in the way that I trade, discretionary. I scaled into the trade using the same 3 reaction areas I normally focus on: the initial supply or extreme, the liquidity sweep of or the equal highs, and I also allowed for a deeper or a fake breakout. And I'm talking about this area here. This is where the open was. So when you are trading with a bias in mind, the only thing that you don't know is where the price is going to actually return from, or where is it going to stop and reverse from. And I know there are a lot of people who are waiting for the move to confirm, and afterwards they enter, like, for example, you would wait here to have a market structure shift and enter to the downside here. That's you. But my style of trading, and I respect that, like everyone, whatever suits you and whatever brings you profitability. For me, it's very hard to enter in those type of trades because I like to enter in trades where I can see a quick reaction from the level where I entered, or I like to test trades, prop trades. That's why I trade discretionary. This is the whole purpose of trading discretionary. So I'm going to put the executions on, but before I want to show you from my journal, I want to show you how the chart looked. And it's very difficult for this. For someone who doesn't trade like this, it's very difficult to understand and to look at this and understand how I frame our trades, or how can I put myself through such a trading process. As you can see here, it's very hard for me to tell you, unless we have the executions on the charts, which I will do. It's very hard to tell you, to explain you exactly step by step. When you look at these entries, perhaps they seem very, very random. But these entries, they were basically taken in a logical way that made sense for me. So I can tell you that the first position that I opened was right around here at this level when we started to tap this area, because I said the reaction that we can have it from here, or we can fake out this and come down. And because I wanted to be short, the whole idea was I want to be short. I think it's higher probability to be short, but I do not know from where the market is going to react. And if you understand this, basically you understand the way I trade. This is how I trade. I try to frame a session, I try to map it based on the higher time frame context. And when I map it, I'm starting to probe levels. Now, I'm going to go back and I'm going to add the executions. And perhaps you are not going to like it at all because it's going to become very, very crowded here. But let's have a look. Executions. Here it is. So, would be great to put those side by side, but I can't really do. My first position was here. You can see minus 0.5. When we got to this point, which was almost equal highs with the Trump tweet high, I added another 0.5. Yes, I was on minus on this position, but I was only with 0.5. I was only minus, I think, the fifth part of my risk allowance for the session. As we came down, I was watching 1 minute and 5 minutes. And as we were confirming, as you can see, after we confirmed with this candle, I entered in this candle here, I added. And so on and so forth. I respected the same process. I was basically looking at structure, seeing what we're having, and adding more, because it's perhaps weird to somebody who sees this if you are used to enter from a level, put your stop loss, have a position, and leave it like this. But when you are in a high probability trade and you are starting small, you are building your position, and you end up, if you are right, maximizing, squeezing everything that you can from that trade. If very important, if you can reduce your risk as you come down, because look what I was doing here. As we were coming down, you can see in this photo, I was adjusting my stops. I was bringing my stops down continuously. So I don't give the market a chance to spike up and take me out from being in profit to end up in actually being in a loss. Now, am I able to move my stops all the time? No, sometimes I'm gonna get stopped out, like the price is gonna go higher. But if you manage slowly to start with 1-2 positions to pyramid, and as you can see, my lots are 0.5, so I'm not trading like a lunatic with 5 lots, 5 positions of 5 lots. That would be $25 per point movement in the NASDAQ. The NASDAQ moves 50 to 100 points in a 1 minute candle at the open. So I opened a reasonable size, but this is the style of trading that I have. This is the style of trading that I want to learn. And this is what I enjoy doing. This is what's important for me. And I think this is what can make me, what can bring me close to profitability. But I think, leaving aside profitability, I think this is what I resonate with the most. This is my identity. So I'm gonna go back into the trade, and I'm gonna try to wrap it up from now, because I took a bit too long, but I wanted to give you some insight so you can understand how I think and how I frame my trades. So as price confirm my idea, I continue to add up to a point. From here, I said I don't want to add anymore. I want to see the market going down. There was a moment where my exposure briefly exceeded my preferred limit, but as the market moved in my favor, the effective risk reduced, as I said, because I started to move my stops down. At some point over here, the trade reached approximately 700-800 in unrealized profit. But what I did well, and what I want to actually give kudos to myself, is that rather than hoping for more, which I was, as you can see from here. Oh, you cannot see my, you cannot see my take profits, but I will show you here. I think I took a photo on my phone. I took a screenshot on my phone. Look here where my take profits were. So rather than hoping for more, I simply decided to take step by step what was the market doing. And what did we end up doing? We reacted at the 8 a.m. low, which is one of the important levels that I'm monitoring every single day. Has been one of my key support levels before the session even started. I was looking for it to see how are we going to react. There is something about this 8 a.m. candle, and it's happening both in the European markets as well as in the US markets. So ultimately, I closed New York for about $300 in plus. End of London was minus 231. New York was plus 300 or 297. Approximately, I was up for the day $66. Financially, this wasn't an amazing day. I cannot brag about anything, and I don't even intend to do so. But from an execution standpoint, I think today was a genuine improvement. Yesterday, I broke my own rule. Today, I accepted the London loss. I respected my risk limit, came back with a completely fresh mindset for New York, and executed my plan, which I absolutely love, entering in trades exactly how I've done in New York. You will perhaps see this kind of trade review many times in my reviews, because it's my bread and butter setup. This is exactly the type of trading day that I'm trying to build throughout this challenge, or consistency in a trading day. So yeah, I hope that you find this insightful in any shape or form. I really hope that the audio is good enough for you to hear me. And I really hope that you learned something out of it. If you did, good. And I would like to encourage you to trade based on who you are. I will tell you this, I struggled so much during the past 3-4 years by trying to follow people that were telling me what to do, not telling me directly, but through a screen. You need to do this, you need to do that. And every time I was feeling something internally that was like repulsion. Like I literally, I felt like I'm in school and somebody's telling me to learn or to study a subject that actually makes me sick to my stomach. This is how I felt. And until you don't find your own trading style, it's going to be very, very difficult for you to feel the joy of trading, or to feel compelled to get at the charts in the morning and be like, you know what, be it a losing day or a winning day. I just want to test this type of trading that literally matches who I am as a person, my personality. So I encourage you to have the patience, allow yourself to look into this and to discover who you really are, and try to align your trading with who you are. And I promise you, if you do this, if you align your trading with who you are, you discover who you are, you discover what type of trading you want to do, your trading is going to improve massively, and you will have Godspeed in towards consistency. I'm not speaking from the viewpoint of a consistent trader, but I feel like the things are starting to align, and I see it also in my results. So with all this being said, I really hope to learn something from it or from this review, and I will catch you in review number 4.